Sunday, the 11th of April 2021. I'm having a look at the global indices, starting off with the US, starting with the Dow. First of all, it's incredibly bullish. It looks fantastic. So the daily here kind of moving away from the moving averages now, starting to head towards the top of that channel. So probably potentially even heading up, say, towards, say, 34,000. And then we've got here a little bit of overextension on the monthly. Okay, so at some point I am going to anticipate a pullback down towards that 29,000. That's fine. The weekly is also heading up again towards the top of its channel, but there's really, again, I think it's fair to say that the potential for it to have enough juice to head up towards 34,000 this week is fair, relatively fair, and it wouldn't actually even at that point necessarily be too overextended. Looking at both the MACD and the RSI, they're both bullish, they're both trending higher, so there's no real signs of divergence here, not a lot of signs of weakness, and so far everything seems hunky-dory. I mean, other than the fact that we are obviously due at some point for a larger correction on the higher time frame. Let's have a look at the S&P 500. S&P 500 here pushing through 4,100. I think that's going to has its sight set on 4,200. It's again heading up towards the top of this channel. So what I mean by that is that it's kind of starting to head into an area where a retracement on this time frame has occurred distance-wise from the moving averages in the past. It's now certainly starting to head towards overextended on the monthly as well. So similar scenario, and I would say on the daily, I would say that is sufficiently overextended. I would really like to see some pullbacks into 4,000, back down towards 39.50. Excuse me, maybe even a little bit further than that. I would say daily is now overextended, weekly is heading towards the top of its channel, and monthly is heading in towards overextended territory. So caution for me in terms of intraday opportunities, a lot of caution. If we do get a deeper correction this week, that makes sense to me. It would be nice and healthy to do that. But again, the indicators aren't showing any signs of weakness. Okay, it doesn't mean that you couldn't get a retracement. You can get a retracement which is part of the normal breathing out, ebb and flow of the markets. So that could still happen. And so I think for that I'll be looking at the 4 hour. Then having a look at the NASDAQ, it's coming up into these previous highs. So that may present a potential issue. But we had this really nice consolidation, and now we're kind of broken free of that. The monthly is, although it had a very it's very bullish at this point, because we had a little bit of that kind of stall. We pulled back. We didn't even connect to the moving averages. We didn't even touch 12,000, and then we've taken off again. So it is incredibly bullish. Almost certainly I think this is going to take a run at 14,000. All right. We'll see how it is with the previous highs if it encounters any kind of a resistance here, but I'm not necessarily expecting that. And again, both these indicators are nice and bullish. No real signs of inherent weakness at this point in time. I think that it would be incredibly dangerous to be shorting this market at this point in time, although it is potentially overextended. It could continue up for another 6 months. It could continue for another year. It could do all kinds of things. Shorting a market, which historically goes up over time, just doesn't really make sense to me as a strategy. I would rather wait and see a daily downtrend before I'd even start to consider shorting opportunities. So I know that people are getting twitchy and they think the market can't keep going higher, but it actually could. Obviously, it can also have a correction, but it could also just as easily climb. And I just think that I would not even consider shorting unless I had a daily downtrend. So just a lot of danger in shorting a market if there isn't enough evidence to support the fact that the market is actually turning on. So then looking at the Russell 2000, this is overextended. You can see a little bit of exhaustion coming in here, and so price looking as though it is preparing to do a swing high. If that's the case, may find its way down to 2,000, but actually I think it would be more suitable for it to come down to 1,700, which would be a really nice, decent, maybe 50% retracement. The weekly starting to stall a little bit, still producing an uptrend, still looking bullish, but not as bullish. Okay, and the daily producing a potential head and shoulders in terms of that being a lower high. So if we break these lows, then the likelihood at that point is to see that market head down perhaps towards 1,900. I'm going by eye here, doing it roughly by eye, which puts us at about 1,900, 1,800. Okay, and that's, yeah, maybe even as far as 1,700. Okay, so the Russell there is showing some possible signs of exhaustion really on that monthly, and therefore correction. A swing high could be forming there. Let's have a look at the FTSE. So the FTSE here looking nice and bullish. Also looks as though it's bust through that 6,800 level. This is great. I really like to see this, and again, because in some of the previous videos I've spoken about how some of the weaker markets have actually managed to recover, and therefore that supports the idea that overall the market is way more bullish. The US is just extremely bullish, but the rest of the market's also quite optimistic, and I think that that is potentially boosted by some optimism towards a post-COVID reality, but yeah, we'll see how that goes. So it's got to deal with 7,000 this week, so that's really the level up here that we've got to take care of. Any kind of pullbacks this week could be dip buying opportunities before it heads up a little bit higher. So again, not seeing any real signs of weakness there. Looking at the DAX. DAX obviously haven't broken through here, going on to these beautiful brand new highs. Looking good, starting to enter overextended territory. The weekly is sort of starting to go up towards the top of its channel. So similar to the Dow, this one would be perfectly, be good for it to have a bit of a correction, but there's no signs of inherent weakness, no divergence, perhaps per se. Sorry, the French CAC as well, also trending up, trending higher. New highs here, fresh highs here, broken through that. Any kind of pullbacks here also perfectly acceptable, but I'm kind of leaning towards these markets trying to push a little bit higher first before they do have any other corrections. Then the Euro stocks, same thing, almost identical to the French CAC in terms of analysis. Actually, Nikkei, let's have a look at the Nikkei. So the Nikkei here, at some point I'd love to see a pullback to test this because we had such a crisp level of resistance here. Pullback down towards 25, correction would be fantastic. And again, that would be in line with the Russell 2000 as well, having a bit of a pullback. All of those could actually potentially happen at the same time. But just looking at it, starting to stall a little bit here, showing a little bit of exhaustion around that point. And so again, in that case, I'll be looking for breaks of these lows here. So we've got lower highs so far, at least a lower high there and lower high there. We'll see how this goes. It's range bound for the moment. Interesting. So a couple of charts are looking like they wouldn't mind taking a bit of a breather. They're not able to keep up with the US. Interesting as well here, looking at the ASICs out of Australia. Really interesting consolidation and a solid bullish move to the upside here. Now coming into these previous highs towards 7,000. Okay, so also certainly now in the monthly area starting to look a little bit overextended. It's had a bit of a breather. It's actually had a really big breather from November all the way through until last week. All the way here in terms of consolidation. So it's had a decent rest, and actually from that perspective means that it could now actually continue to push a little bit higher. We'll see. That daily is starting to enter overextended, and therefore a bit of a pullback into 6.9, a little bit lower, back into these levels of resistance to test for support. Could be fantastic. Could work really well. And so really my point in this being that all of these have got some. A couple of them are showing that they need to take a break. They could consolidate while the rest move higher, but also any kind of pullbacks we get. Hopefully we get some retracements this week, just in terms of getting some fresh buying opportunities when the market takes a bit of a breather. That would be great. And just out of curiosity, looking at Tesla, looking at Apple. So Tesla's had that nice little correction down, very overdue. Still finished relatively bullishly. We'd have to see a break above that high. If it did continue down towards 400, that would also be acceptable. We'll see. Apple, strong consolidation, but it has to get through this 140 level, let's call it, for resistance. It's got to get through that, but it has produced a high low, so it may actually just break out and just keep going. It's had a bit of a breather. All of that being the case, yeah, the weekly, look at that consolidation for 6 weeks, looking good. Nice little swing low there, nice push up back up to these highs. So we'll see how it reacts when it gets back up to the old highs this week. But that's showing like it's got a little bit more juice left in it. So interesting. I think in summary, there's a couple. There's a couple like the Nikkei and the Russell 2000 that show like they definitely would be quite happy having a bit of a monthly correction, just a retracement there. And the US markets looking like they could just do with a normal daily retracement this coming week, and but they are certainly they are juiced up and ready to go and having a good time. There's no real signs of failure or weakness that's creeping into the markets. We would normally see that. We don't go from an incredibly bullish market one day to an incredibly bearish market the next day. Normally, as events normally unfold, we usually have a turning period where you start to see more and more exhaustion come into the market, and it gets weaker and weaker, and eventually the sentiment starts to shift. And we're not even seeing the early stages of that at this point in time. But I'm very curious to see where we end up next week. I know that when I go, okay, the market's looking really bullish, then we almost immediately do have a bit of a correction, and then the market carries on up. It does, but it's the point at which it looks the most bullish where it decides to have a retracement. So let's see how that unfolds this week. So again, very, very cautious for me on intraday trading opportunities, because a lot of the charts are already pushing at the highs, and therefore fresh big moves up to maybe the nearest round numbers is a possibility, but it's also slightly higher risk because we're overextended on a couple of the different time frames. And that's it. Thank you very much. Have a great week.